Hey guys, welcome to Stock Talk on June 11th. It's currently 4:45 p.m. Eastern Time. I actually recorded this video, a 40-minute video, just a couple minutes ago, and I realized when I listened to it, the audio was completely distorted. It sounded like so you really couldn't hear anything at all, but I'll try to do my best to reiterate what I said in the previous videos. Thank you once again for joining in this channel. Let's take a look at SPY, which tracks the S&P 500 on the 180-day chart, and we're using the Thinkorswim platform. So we talked about how SPY in the general market pattern has been a bull flag pattern, and we know that it's bull flag. So here's the 180-day chart, and it's a bull flag because if we zoom in on this area, we know that there's a pull followed by a flag and a massive consolidation area, and now we're stretching back higher. We noted that the blue line, or the light blue line, is a resistance at 278, and that we know that there should be a support pretty much around here, right? Actually, there's a support around 274 certainly, but there's also a minor support around 276. So the question is, how do I go investing in the markets right now? Given our current position, what do I see in the near future? So one thing to note is, based off of history, we know that we've had a stretch or push followed by a consolidation, and now we're going on an upward trend. Yes, we had a resistance, but look how we just bounced off the light blue line, or the 20 EMA, before now we're heading higher. So next there's a resistance at 280, and in my opinion this resistance will be stronger than 278. The reason is, you can imagine, as the markets keep pushing higher, we need to start resting, either consolidating sideways in a bull flag pattern, or we start coming down a little bit and then edging down before another leg up. Either way, we're nearing the major resistance, and you might be asking, well, Kevin, how do you know that 280 is the resistance and not some other arbitrary number? Well, trust me, these numbers aren't that really arbitrary once you look at the charts. So looking at the resistance area, you can see that this was the resistance in previous areas, as well as a major breakdown area on the one-year chart. Hence, we do expect 280 to be a major resistance for the market. So you can imagine right now, as we're edging higher and higher, it might climb tomorrow, sure, to 278, 279, 279.50. It might get really close, but once we get at this point, we're at 278.56 currently where we closed. We need to start thinking about taking our profits out of the market, because you can imagine we have this long streak of an uptrend, and now the markets need to rest, at which point we need to start releasing some of our shares back out so that we can find better positions to go in the future. So that is SPY. That's what I'm looking at in the near future, so be on the lookout for that. TVIX, which tracks volatility, right? We talked about how markets push higher. If markets do start pushing higher, we expect volatility to continue dropping. And here's volatility. We see that SPY has broken the 278 mark, and now we see volatility heading towards a 180-day low. So you might be thinking, well, at this time, should I be thinking about taking a TVIX position, because you just told me that SPY might get rejected at 280. So I think you could start thinking about it. Right now, it can still climb a little more, right? We're at 278, 50 something, 278.56. We're not exactly at 280 yet. Doesn't mean it'll have to get to 280 exactly. It might get a little lower, but at the same time, we can think about taking a position on volatility. In my opinion, is just a matter of time. So, and if you take a position on volatility, the first spike, make sure if you do catch this, you do exit, rather quickly. You don't want to. We are on a bullish streak, right? SPY and the general markets are on a more bullish streak. We know that there has been a reversal from the bearish to the bullish pattern. So in our head, we need to go long with the markets when we have the opportunity. And what do I mean by that? That means if the markets start dipping and dipping heavily, we need to start thinking about adding in positions towards the market, because we're on the reversal area. And you can imagine, once we get to the resistance area, the markets will be dipping. That's when we need to start thinking, when we found that bottom, to add positions into the markets. So here we are right now, volatility. Really, right, this was the previous support, or the support that we kind of quote unquote, but it really didn't really matter as the markets pushed higher, and now we're pretty much making the 180-day low. So here we are on the volatility. Let's take a look at commodities really quick. /CL. I think you guys were pointing out some comments earlier. So I'm going to read some of your comments in regards to 4/CL, so Addy Boy. Just try to reiterate that 4/CL from your 6/9 video, which was 2 days ago. CL has broken the pattern of higher highs and higher lows by falling below 66 level, and a good entry point would be at 66.42 level. Once we see a green candle at that point, anything below is risky. If it breaks the 64 support, the next stop is 62. Do you think DRIP has some potential now? So I think you pretty much answered your own questions. This is a very astute observation, I think, and this is something that I'm pretty much going to talk about right now. You talked about how if crude oil starts falling below 64, then the stop is 62. So let's take a look at here, right? If it falls below 64, actually, all right, 64.40 around the area, the next support would be around, well, we can expect a support around 62.60 or 62.70. Around that area would be the next support. So question is, has crude oil fallen? So you're asking if DRIP is a good play. So let's look at more of the recent trend. We know that it has broken the higher low pattern, right? You can clearly see on the 180-day chart that here's the higher low, and now all of a sudden, what's the higher low functioning as? When it was functioning as the support, now it's functioning as the resistance. However, on the more near term, what are you looking at? You're looking at a higher high, right? Plus a higher low. So this is more near term. The higher low might not take that much precedence, but certainly the higher high, which has acted as a previous support, is now acting as a resistance. That's still a pretty positive sign for crude oil, in my opinion. And remember, I am still in GUSH, so you can imagine my stance. So in regards to DRIP, right? For DRIP, you're at the resistance right now. When can you take that position into DRIP? Pretty much right now, because even though we're at the top, right, you know where to stop loss out. Should 4/CL start closing on a 4-hour basis above the resistance line, so let's say 66.40, that's when you can take that position, or that if you're in DRIP, then you know when to get out. However, if you're right, if you just follow this trend, you do expect this resistance to function as a resistance, right? So you expect this to come back down and you know where to exit. So if you are in a position with DRIP right now, if you got in at the end of day, I think that is okay if you set your stop loss. But at the same time, I'm thinking this is a more bullish pattern because why? It's a higher high pattern, right? And even though it looks like a higher low, you can see on the 5-minute, 5-day, 5-minute chart that this has been a higher low pattern. So at some point, we do expect this to, push continuously a little bit higher and higher. So that's what I'm looking at. So which tickers am I looking to get into? Should crude oil start dipping back to its support again? Well, once it starts dipping back to its support, those tickers such as UWT will once again come into play. UWT has a more one-to-one correlation with 4/CL. So here we are, right? Pretty much the same thing I'm talking about. We're at the resistance line, and you could take a position once it starts dipping, or if it's just actively start breaking this resistance line, then you can imagine on 4/CL, if it actively starts breaking the resistance, where's the next resistance line? Well, the resistance area we know is around 66.32, but like I said, if we actively closed over 66.40, then we can say that the next resistance could possibly be around here, 67.34, and then finally 68.50. Around those areas are the major resistance areas once we break that, if or when we break that. So let's take a look at DRIP really quickly. You talked about how you're looking for an entry point into DRIP and whether if it has any potential right now. So we're looking at the 1-year chart. I'll show you the 1-year chart. Actually, yep, the 1-year chart right here. We did these boxes a long time ago. These boxes represent breakdown areas of major support. So you can see that this box broke down a major support and we kept going lower, break down major support, and here we broke the major support and all of a sudden we came a little lower. So one thing to keep in mind is if you think DRIP has potential, right? We don't want to guess where the reversal is because obviously, looking at the 1-year chart, even looking at the 180-day chart, any chart you're looking at, it's obviously on a downtrend. So you have to keep in mind, if you're fighting against the 180-day, the 1-year pattern, the 3-year patterns, you know you should be thinking of something wrong because you're being a little too optimistic. So in this case, right, we came down and now all of a sudden we're consolidating. But one thing to note is we've gotten rejected at the light blue line, the 20 EMA line, right? Rejection of the 20 EMA, rejection at the 20 EMA, and now we're down here. So what are we looking for right now for drip? So we talked about drip already a little bit, but look what happened here. We broke the major support. We started what? Consolidating, getting rejected at the 20 EMA, and all of a sudden we broke it again, and then it came continuously lower before we had that recovery. Okay, what's happening now? Coming down, consolidating horizontally, right? So what does that mean, right? It doesn't mean that it's going to have to come down because of previous patterns, but I'm just showing you that because this has happened in the past, there's a likelihood that it could happen right now, right? Just based off of trends, there's a likelihood that it could happen. So that's just something to pay attention to, and that is why I am in GUSH and not in drip, because GUSH is on an upward trajectory. Let's take a look at GUSH really quick, right? GUSH, we know, has a support at 33.60. But at the same time, you guys can see this consolidation pattern. We had this huge rise up. Now we're consolidating almost like a flag pattern, you can imagine. And at some point, if this does play out the way I expect this to go on the upside again, at least testing $40 and $41.79. So that's what I'm looking for, but just be on the lookout if you are in drip. Just be careful. All right, let's take a look at /NG, and there was a comment on natural gas. So let me take a look at the natural gas comment really quickly. So Eric, yeah, I knew that natural gas is bullish, and I find it hard sometimes to find entry because it will gap up 7 to 8% pre-market, and it will basically hit the resistance shortly after. So I think that is another very smart comment that you made, because that especially held true today, right? We saw that, after the futures opened yesterday, that natural gas spiked higher. We can see that on the 1-day, 1-minute chart, how natural gas managed to spike higher when we were pretty much could not trade, right? So, right, here's the spike right here. There you go. You can see that a little better. So how do we trade this? Well, we kind of talked about the 180-day chart, right? Because we talked about on every video that natural gas has a higher high plus a higher low. We also noted that there was a support around 2.884, and at the same time, we know that there's a resistance around this area. So one thing to note is, once we're at the support, 2.81, we talked about it on this video, we talked about it on here, that we could take a position on natural gas because we've confirmed this as a support in previous patterns, hence, we can expect the same. At the same time, you can also note that, will it have to pop to 2.975? Not necessarily, right? It can certainly get up there, but doesn't have to get up there. So I want to be a little more conservative with my trade. So in this case, I'll show you in UGAZ in a moment, like where we can exit. But at the same time, let's take a look at UGAZ and how we could have traded UGAZ correctly. So I kind of drew this line in the previous video that I scratched because the audio was off. But UGAZ has a support at 62.71, which follows natural gas. Note that, right, we could have traded on this day, which was Friday. We could have actively traded here, which was on the bottom, actively traded here, which was on the bottom. One thing to note is, like I said, I like to be a little more conservative, so I drew in this resistance line, this lower high line. So why did I draw it like that? Well, it was because, all the body of the candles stayed under the resistance line, right? Sure, we had a spike up, but it's really what matters is where it closed, right? Where the candle closed is more important than where it spiked. So in this case, your exit position. So let's just X out today, right? If you got in a position on Friday, which we talked about right here, then at this point, that you form this resistance line and you can exit today at 67.07, which I think is a perfectly fine number to invest in. So what are we looking for? So natural gas is, you can still trade it, right? This is during the market day, and this is during the market day as well. So if it comes down, just note that we're losing the chance. Sure, it can go up tomorrow, right? I can see it going up to $67, $68, $69 again. But should it start coming down, we can think about investing at 62.65 around that area, but just note that the potential for profit is getting a little lower because it's getting etched in by this descending triangle. At the same time, just be cautious because you know that, look, we have a flag, we have a kind of like a flag pattern, so this might start actually trending higher. We'll just have to see what natural gas does at that point. But this is certainly something I think that is tradable, so I hope that helped with the analysis. All right, let's take a look at /GC, which tracks gold futures. Gold futures, same old, right? Same story. We know that there's a support around 1287, a resistance around 1312. I've literally memorized these numbers already. It's been doing not much, and in that case, we wouldn't be looking into a position into JNUG, which follows gold, or JDST, which is inverse gold. So it's not doing much because we said that this was a support, and we can't really identify why this is support because it hasn't acted as support in the past. So the market said that this was support this time, so we'll just take that and as a resistance. But JNUG went up 1.8% today. Really not that much. Looking at the 180-day chart for JNUG, right? You guys can see that in the past almost month, right? It's just pretty much consolidating right here. Not doing much. The potential for profit certainly isn't there. So really not something I'm actively watching right now. Let's get right to your comments. Okay, so hopefully, let's see. Addy Boy will tackle your comment. Could you please break down LRCX for us? I got into it at 184.84. Now it's below that. How do you see the stock? So LRCX. So here's LRCX, and I actually boxed in this earlier. So we've looked at this chart before, and the reason why we looked at this is we saw this on the 3-year chart especially. We saw this bull flag pattern, right? Massive surge up followed by consolidation. And we actually drew in 2 lines. One line was the resistance, horizontal resistance at this area, which was around 185. Another one was a descending resistance that's around, currently will be striking at 175. So that is 185 to 175, around $10 range. The reason why I drew it in like this is, sure, we see that there's a horizontal support, horizontal supports and descending horizontal supports right here. But at the same time, we see it breaking the support here, breaking the resistance here. So it's not a sure bet that that horizontal support is going to hold. So what does that mean? You got in around 184.84, which is, I think, a pretty decent price point because you're saying that we're at the resistance, horizontal resistance, I'm going to take a position. That's not too bad, right? We're right here. But at the same time, it is actively trending lower, and you can see that where I boxed in is the place where I would think about taking that position. So if you can imagine, if we took a position at 177 and it came a little lower, make sure you're comfortable with losing that percentage of money because we don't want to start selling at the low if your emotions or my emotions get the best of me and saying, oh man, I need to start at the low because I can't risk any more of my money because because the markets are pulling higher, because there's other opportunities, whatever reason. We don't want to get into that mindset because when emotions come into play, we make bad decisions, generally speaking. So this is a comfortable position, this box, where we can take that position, but at the same time, just note that we're still falling, right? We can still consolidate to the 20 EMA, the light blue line, before it continues to fall. So right now, how did we identify that this was a reversal area in the past? Look how we consolidated here, then reversed back up to the resistance, right? Here, this was a bullish reversal candle back to the resistance. This is kind of like a reversal candle area again, back to the resistance. So in this area, and this time, is there any pattern of support? Not yet. So what you could do is you could certainly average down, right? If you took a position now, hopefully you didn't go all in onto your account. If it starts dipping a little lower, you can take a little bit more position. Dipping a little lower, take a little more position. You can imagine how you start averaging down that once it starts reversing, which you do expect, and in my opinion, I would expect for this one to start reversing, then you would be in a comfortable average position. At this time, hopefully you're in a comfortable position. So yeah. Tango Tango, your analysis is spot on for my previous call AEP. It was trending down. Could you take a look at MS? Fed meeting has come up this week. So yeah, the Fed meeting is actually coming up in 2 days. So we would look up first of all. So we'll talk more about that in tomorrow's video, I think. But here's MS, right? Morgan Stanley, we're looking at the yearly chart, but looking at the 3-year chart, you see that we've had a spike up, and then finally we're forming some sort of flag pattern. So the reason why markets are forming all these flag patterns is, you can imagine volatility was spiking in January, I think in February, March especially, so those months, and that's why because of this really positive outlook last year, we had this continuous uptrend, and all of a sudden this volatility has formed the flag pattern. That only means that we're getting some good opportunities to start going into some stocks. And I'm about to talk about another one in a moment. But here's Morgan Stanley right here. This is a pretty decent pattern in my opinion, and but the thing is, right, it's still forming the flag. There's no sign of a reversal just yet, and so if you got in around this area, 50.83, that is where I would be comfortable with taking a position, even though it dipped a little bit, right? It's come back to the 20 EMA, and you can expect, if you bought in at this area, at least a 3 to 5% profit. If you bought in right now, you can still expect some sort of profit, but it might take you a couple of days to reach that 3 to 4% profit. So where's the most comfortable position? Probably at the support down here. At the same time, if you're in it right now, then I think you would be comfortable until until it starts dipping significantly below the support level. So okay, yep, so that's MS for you right here. Hopefully that helped. All right, Chris, not sure if Tesla will close above 328 to form a bull flag pattern. Can we briefly go over it? Thanks. Yeah, so Tesla is one that I'm actively watching. I put a small position in Tesla already. So why am I interested in Tesla? We're looking at the 3-year chart. I'm going to show you AMD really quick. AMD has emerged out of the bull flag pattern. You can imagine the time it took to consolidate in this flag pattern. All of a sudden, it's 1573, we're reaching 3-year highs like it's nothing right now, because you can imagine there's no resistance levels up here because we're forming all-time highs. So what am I looking for? Look at Tesla. Okay, now that should spark your interest, right? Okay, so here we go. We have a flag pattern, a bull flag pattern right here, and now what candle are we forming? Note this is a weekly candle, which means Friday's close will be especially important. I am looking for a weekly close, 330 or higher, that will show a very possible breakout at that point. But until then, we have to take it with a grain of salt that this candle has not formed. For example, what happens, just theoretically speaking, we have this candle now, but by Friday we pulled back down to 322. What would you be thinking? We're coming back down, right? Because that is a very long tail candle. We spiked up, we couldn't pull above, and we're still back at the support. All right, there's a good probability that it might still come down. Another thing to note is, I'll show you guys the 1-year chart. Okay, here we are. This is the candle that we formed today. Very positive sign if we were on a breakout trajectory. However, taking a look at this, right? Look at this right here. Look at past patterns. 1 candle above the resistance, 2 candles above the resistance, and then a massive downtrend. Only 1 candle above the resistance, right? So, is this definitive of a breakout? Certainly not. Could it break out? It could, but we just need to give it a couple more days, and we have to pay attention where we close on Friday. If we manage to close above 330 on Friday, I am almost certain looking into a position into Tesla at that point. So let's wait for that, and we'll see where it takes us. If we start actively closing at 340, 345 in the next few days, I'm going to also take a position at that point, because that could be a sign of a breakout pattern as well. So that's what I'm looking for in the near future. So Yeah, hopefully you guys are. So how do we invest in Tesla, right? Because if you get in right now and we're wrong, and you put in your entire account, you're going to be waiting weeks after weeks until we form another FLAC pattern to the upside, right? It could still come down to here. You're going to be losing like 15%. You're going to be like, oh my goodness, what the heck? So in that case, only put in small position in which you're comfortable in. This is money that you feel like, okay, maybe it's 5% of your account. Doesn't really matter that much if it goes up or down, but if it goes up, I can make a ton. If it goes down, yeah, I know where to stop loss out. I'll take that position once we form that flag again. So, anywho, I hope this helped with Tesla, and this is something I am actively watching out as well. And I think you guys, all of you guys, are like, submitting really nice tickers, really good patterns. So continue on doing that. I think everyone's getting better. I think, especially the people who I've actively seen like commenting to the videos. So great job, everyone. Just want to give you guys that. So Rizwan, hello Kevin, would you please go over SPXS support at 24.15? Thanks for the videos. Absolutely. Here's SPXS on the. So we're looking at the weekly chart here, and we see that it's declining. And then just a quick glance shows that this is S&P 500 bear ETF at a 3 times leverage. So one thing to keep in mind is this kind of acts like volatility, right? So we said that as SPY continues to push higher, volatility will continue to push lower. So at the very least, we are looking for positions that go into the markets on the dip, not against the markets. This one certainly is at the support around 24.15, but this support won't really matter because we flipped from the bearish to the bullish stance, and we expect this to, even though we might, have climbed back up, but certainly we won't expect this to reverse at this area should SPY continue to push higher. So in this case, I'm actually looking for good positions into other ETFs, right? Like TQQQ, those things as the markets are dipping, but not this one because this one only has a small potential to go up before it comes back down. So I hope that helped with this ticker. JWM, I'm looking at DY and trying to figure out good entry for a multi-week swing trade. I tend to get into trades too early and would like advice on what to wait for before going in on a stock. So DY, let's take a look. So here we go, DY, and since you're looking on a multi-week swing trade, we're looking at this, right? Here's the trend, and what do you see first? Well, we see a support line right here around, this higher low pattern. I completely agree, and we're at the support again. It bounced off. But one thing to note is, look how much we dropped. This percentage point is 20 plus percentage point drop. So we have to look in the past. What happened in the past? Here's a 20%. Here's a big drop, and this was due to earnings, right? This was due to earnings, looks like. So what happened in the past? We consolidated, went to the 20 EMA, came back down to the support, reconfirmed it, then went on the uptrend. Okay, what are we expecting? Coming back down, 20 EMA doesn't have to get all the way over there. It might go a little over, it might even get a little under, but we can reasonably expect it go to the 20 EMA, perhaps test it, get rejected, come back down. Now at that time, it might even go a little lower than 93.72 if that's the resistance or support, right? It might even go lower to the 150 SMA line. At that point, we might find some support, and then we might finally see an uptrend. So this, because we're on a weekly candle basis, might take a month or 2 months. It might take a while before that actually happens. So in this case, if you took a position here, it's okay. I think just one thing to note is make sure you know where your exit is, right? If we start getting over the 3 to 4%, 5% area, you should think about getting an exit. If we spike over the 20 EMA, the light blue line, you can still be in it. It's just, depending on the way we get over the 20 EMA, which I don't see it pulling up to 115, right, anytime soon. I certainly don't see that right now. But once it gets over to the 20 EMA, I would start thinking about taking your positions out. And then once it comes back down, I'm looking for it to drop a little lower below the support. So just ask yourself, right? Look at these candles down here. See these tail candles? These tail candles are actually like 5 percentage points. So think to yourself, what happens if it, just theoretically speaking, right? Go to the 20 EMA, it comes down, goes below the support, and it makes a 5% tail, 5.5% tail candle, 86.70. The stock falls to 86.70, which is $10 less than currently right now. how would you feel, okay, given your position? So would you feel like I need to exit? Would you feel like I would add more to the position? So make sure you have a plan based off of history, right? This is what will happen in the past. Based off of the past, how would you feel if this occurred again? So if you have that mindset, I'm sure you'll be able you'll be in a good trade at least. But for now, if you're in a position now, you're okay. Long story short, but yeah, hopefully that helps. Okay. Coolio, all the lines disappear for TVIX because of the split. Thank you very much for that. Christopher, thank you for the videos. Kevin, you're welcome. I took a position on MIK at 2030 and see a slight resistance at 22. Wondering if you can take a look. So MIK at 2030. So here's MIK. Okay, so here's the support, right? 2030 is pretty much right here. And, you know, it's a pretty good position that you took. And the support we know is at 1848. The resistance we know is a low or high resistance. So the question is, can we expect this to go all the way back up to the previous resistance mark around $26? Certainly possible, but it's not very likely. Okay, so what can we expect? Well, you can see that we've popped to the where? We popped to the, here's the SMA, right? 150 SMA, kind of got rejected at the area. Got rejected 150 SMA area right here. So in this case, we can expect this area to function as, actually box this in as a resistance. $22, around 22, exactly what you said pretty much. 22.24 to 22.72. Yeah, so if you got in now, very nice, but make sure as we get near this area, you start taking your profits, right? You've probably made by that time 4 to 5 to 6 or more percentage points. You know, it's $21. We're getting close to that area. So start thinking a little bit about taking a little bit of your profits. Of course, you can imagine if you took your profits, you got it. But if it comes down, you can always use that profit and invest more into it, right? That's just playing the pattern, and you know that's how people trade. So great job on identifying the pattern. I think I like this horizontal pattern as well. So good job. Raymond, very informative. Thanks for these videos. I'm currently on a long position IQ. Should I start looking for an exit strategy? What's the best way to identify a good stop loss on a stock that has been climbing so well? Okay, so IQ. It's hard to judge with a volatile stock. I agree. So here's IQ. We know that this one has been public starting in March, right? Because we've looked at this one in the past. So IQ has been continuously climbing. So look at this pattern right now. Tell me, you know, everyone, you're thinking, what do you see in this pattern? How would you answer that question? How would I exit? Or how would I exit given this is the information that I have because it went public in March? Well, one thing to know that is this is on an uptrend. Certainly it's not uptrend, but look at today. We're so far above the light blue line, the 20 EMA, you can almost argue that today was a good day to take out your profits, at least a portion of it, right? That's how you would lock in your profits because you made that high. Now, how did this stock perform when it started making its high? Well, look at previous patterns. Consolidation to the 20 EMA, another boost up. Consolidation to the 20 EMA, another boost up. Consolidation to the 20 EMA, another boost up. Consolidation to the 20 EMA, another hit up. Now we're up here. You can imagine this is a pretty good sell point. Now when can you take a position? Take another position. If it consolidates horizontally to the 20 EMA, you know where to take that position because just based on past trends, you know that there's a good potential to go higher, and then you know where to set your stop loss. Or you're like, well, the 20 EMA is right here. Well, I'm going to set my stop loss just 3%, 2.5% lower. Boom, that's it. It's not too difficult at that point, but if you got in right now, if you added your position right now, where's your stop loss, right? Are you willing to sacrifice whatever you gained today in order to hit the 20 EMA? You probably wouldn't, right? So, so my point is, if you got in today, you would be much less comfortable than if it consolidated sideways and you bought in at the same point. Say you sold at 35.51 today. Consolidation sideways, you bought in next 2 or 3 days at 34.51. That's when you can take that position. But right now, if you bought in, you'll be like, oh, like, you know, that's the question you're asking me right now. It's gone up so much. How do I find it? Then you're less certain. At that time, you should start thinking about exiting just a portion of it at least. So yeah, I hope that helped with this one. Wendy, please take a look at FRAC and love what I think. Okay, so FRAC. So we see FRAC, right? There's actually two support areas. One is at 1339 and the other one is at 1274. So I'll show you guys why the other one is true. So looking at the 3-year chart, you guys can see this easier, right? 1274 support, 1334 support. So right now, what was your comment? Sorry. Would love to know what you think. Okay, so we're clearly on the downtrend. We're actually looking at a weekly chart of the downtrend. So just taking a look how we're coming down, right? We're coming down very much like this pattern right here. How many weeks did we take before it recovered back up? Approximately 1, 2, 3 weeks. We're on our first week down here. You might call this like a half week right here. So we expect at least one more week of kind of testing the support area just to make sure that we can hold above the support. If you took a position now, I think it's okay as long as you have patience. Let me see. Yeah, so if you have patience and you're saying, okay, we're at the support, but I'm willing for this to play out because obviously this is on a downtrend right now. But because we're at the support, I'm banking on the fact that in the next month or 2 months, that's going to start recovering and going back up. In that case, I'd be okay. But if I were to look for a position, you can see that on the 180-day chart, how this is the 20 EMA. We got rejected here, pushed back, and got rejected today again. We're still on the downtrend. And this is actually a pretty steady downtrend. I wouldn't be too surprised if we, broke this support and came back to this major support and retested it. But in the meantime, I think I would just wait for this one and let's see it to play out at least 1 to 2 weeks. And then let's come back. Actually, can you type in that ticker in the next few weeks down there? Can you please take a look at FRAC? And I'd be more than happy to take a look at it that point as well, because I'm actually kind of interested as to what will happen in the next few weeks. So the reason is this is a horizontal pattern. Most of the candles are above the current buy area, which I like. It's just currently still on a downtrend. So yeah, great call out though. I like it. Okay, Simon scrubbing the request. Okay, all right. So thank you for commenting on the video. And let's see. I think that's it. So thank you once again for sticking with me. If you guys watch part of the video, maybe just your ticker or the entire video, all this is your time. I'm very appreciative. I know that your time is very worthwhile. So thank you so much for watching these videos and taking the time to kind of just help you learn. Remember, all these, analysis that I do, it's just to kind of help you, but in the end, it is your decision, it's your money. So it's whatever you feel the most strongly about, and then you take that position, right? But I'm just trying to help you, guide you in that analysis, whether you think that's helpful or, you can take it with a grain of salt. That's up to you, because I'm not certainly 100% correct. No one's 100% correct. And like some people said, if I'm 100% correct, I would be on the beach house not doing stock talk videos, right? So, anywho, thank you guys for watching this video. Like if you like this video, and subscribe to this channel if you want up-to-date notifications. I hope this video wasn't too rushed, but we're going to try to lower the time a little bit on future videos, just back down to perhaps 15 to 20 minutes, just because these videos get really lengthy. But yeah, thanks again, and I'll see you guys tomorrow, Tuesday, for another stock talk. All right, see you guys tomorrow.